Welcome to Trigonometry. In this channel, we'll break down the art and science of investing and trading. I'm Mr. X. I'm here to share knowledge, strategies, and insights to help you navigate the markets with confidence. Whether you're a beginner looking to build wealth or a seasoned trader sharpening your edge, Trigonometry is your go-to resource for practical tips, market analysis, and a fresh perspective on financial freedom. If you like the content that I share, please like this video and hit the subscribe button, and let's get started. So, why am I sharing my knowledge here? Do I even know what I'm talking about? Or who the heck I am to have the confidence to share what I'm about to share? I have an X account and Discord channel where I share and post my trades and opinions about trading and investing. I have many investment account. I have long-term account, which I very barely touch, and I have speculative account where I trade frequently. And this is my public account. And this is a Roth IRA account from Robinhood. I rolled over my Roth IRA account from Fidelity last year into Robinhood to get the 3% match, which was awesome. And I love Robinhood. And I've been doing active trading here. And I've been doing mostly swing trades and occasionally day trades. The reason that I choose this account as my public account is that it is almost impossible to fake the numbers here, since there's an annual limit of how much money you can deposit into the Roth IRA. I started with over $22,000 back in March 2024 to now $582,000 in a little over a year, a return of 2,500%. And this count is my best performance of all. And this is my proof of I know what I'm talking about. Most financial YouTubers talk a lot, but very few actually show their account to prove that they know what they're talking about. It is my belief that the only way to prove that you know what you're talking about in investing and trading is to show your return. If you have no return, I'm not going to listen to you, no matter what you say. I know a lot of people say you can't time the market. It is impossible to time the market. I say, yes, you can. You can absolutely time the market. My account is proof of that. Most people cannot time the market, but I can. I am not most people. Timing the market is not easy, but it is possible. You have to put in a lot of time and effort to learn about market dynamics. You need to learn about individual stocks, market sentiment, economic data, monetary policy, fiscal policy, even politics to an extent. Financial markets are extremely complicated. There's so many moving parts, and they all have big impact on the markets. As an example, let's talk about some of the most recent events. The war between Israel and Iran. They're shooting missiles at each other. Oil price spiked. Fear of long-lasting war causing inflation, and Iran potentially shutting down the Strait of Hormuz. But right after US dropped the bombs. The B-2 jets dropped 6 bunker busters to destroy Iranian nuclear facilities. The oil price went straight down. Not up, it went down. Why is that? Shouldn't it go up? How do you interpret that? My interpretation is that the market believes that the uncertainty has been eliminated, the uncertainty being the nuclear site. The market was already pricing in a peace deal, which it did happen. Trump brokered a peace deal between Israel and Iran. The war was over. Once oil price comes down, the fear of inflation goes away, stock markets goes up. And that's the basic market dynamics playing out right now. But if you only read the news, you'll be thinking oil should be up and stock should be down, right? Oil price even started to drop before Trump's announcement of the peace deal. Because you need to understand that the market is always forward looking. It's not about what just happened, but what about to happen. And this is very, very important. I repeat this again. It's not about what just happened, but what's about to happen. Another example. The Fed Chair, Jerome Powell, testimony today in Congress. He said he saw significant inflation risk in the summer due to tariffs. However, if inflation does not get worse in the summer, the Fed is in position to cut rates sooner. At first, it sounded very hawkish, right? But if you look at the Fed Watch tool on the CME group, right here, July 25, it has the 80% chance of Fed not cutting rates and 18% chance of Fed cutting rates of 25 basis point. But if you look at the September, it only has 14.8% chance of Fed not cutting and 70% chance of Fed cutting 25 basis point and 15% chance of Fed cutting 50 basis points. So market is forward looking again. Market is forward looking to the possibility of rate cut in September and even possibly in July. I know 18% doesn't seem like a lot, but this number has been growing in the past week. So I don't know if it's gonna keep growing, but market could be pricing in that this number could keep going up in the next couple weeks. And then if you look at the markets today, everything's going up. My Robinhood call up 35%, AMD call 56%, Meta call 14%, Nubank call 57%. And my Tesla calls were down a little bit today, but they were up over 50% yesterday on a huge day to yesterday. And today, my return today, 20% in the total account, almost up 100K unrealized profit. This means market is pricing in or trying to pricing in the rate cut or front running the rate cut, however you want to say it. So another example of forward-looking market. It's not about what just happened, but what about to happen. This will take a while for some of you to process, but the longer you stay in the market, the better you understand the market dynamics. So that's all for this video. Let me know what other content you'd like to see in the comment section. I hope you enjoy this video. Please hit the like and subscribe button, and I'll see you next time. Bye.